Have you ever watched price hit your exact field level, hunt your stop, and then explode into a massive move without you? You're not wrong about the direction. You're just acting as someone else's exit liquidity. You see, retail traders use Fibonacci to find support and resistance, but the market makers, they use those exact same levels to find your orders. Hi, my name is Timothy Lee Rogers Sr., and inside the magical Fibonacci tool, I am handing you the exact institutional framework you need to flip the script. No more guessing, no more games, no more retail traps, just pure precision order flow. We are officially in the final countdown to the June 1st launch, so you can still choose your level of commitment across 3 tiers. We have the Pro Level Sprint, Pace Labs, and the Pacesetter Cohort. But fair warning, Pace Labs and the Pacesetter Cohort disappear May 31st. No games, they're gone. So don't look back on June 1st wishing you'd take action. It's time to stop feeding the markets, switch sides, and learn to hunt liquidity like the pros. Good afternoon, everybody. How y'all doing? Y'all, excuse me 1 second. I just got a text. I'll be right with you. All right. Sorry about that. Good afternoon, good afternoon, good afternoon. Yes, today is the last day here to Learn to Share. If y'all don't know what Here to Learn to Share is, talk about it in the chat. Today is the last day to participate for the Pace Labs or the Pacesetter Cohort for the magical Fibonacci tool. Trading secrets that feel illegal to know. Yeah, man. Today the last day to take advantage of the, right seat, left seat, Jesus Christ, y'all. All right, yeah. Today's the last day. You know how you see those sense of urgency, what they call them, scarcity campaigns, be like scarcity. And I don't care if it's 1 person, 0 people, 100 people. It can't be 100 because I got limited slots on both of them. But I don't care if it's 20 slots for the cohort, 20 slots for the Pacesetter Labs. Now, just buying the magical Fibonacci tool, that's always going to be there. But for the cohort and the Pacesetter Labs, the Pacesetter Labs is 1 week, one-on-one time with me, going through each lesson, right? Going through each lesson, each night, meeting each night, starting tomorrow night at 7 p.m., going through each lesson, 1 lesson at a time, and me giving my extra commentary. We're going to be on there no longer than an hour. I'm not going to stay on longer than an hour. And if you got any questions or anything you need help with, and then the Pacesetter Cohort is a 2-week thing where you, during that first week with me, and then the second week of June, right, after we watch the videos together, then the second week of June, we're meeting every night at 7 p.m. And I'm going through showing how to actually put it into effect on the charts, right? And with the cohort, you get all of the recordings from the first week and the second week and the and the course itself. But it ain't no scarcity thing. It ain't no, oh, hurry up, the clock is ticking, and then once the clock tick down to 0, all of a sudden it's back again. No, it's not. You won't ever see it again. No matter if don't nobody sign up, or if one person sign up, or if it don't matter. You won't never see it again. Right? You won't never see it again. All right? Because I'm a firm believer in, like, when you learn something, I like to be able to ask the instructor specific questions. I like the mentorship type of interaction. That's why I do live streams. You know what I'm saying? I could easily just record videos and put them on YouTube anytime, but I like to do live streams because I like that mentorship interaction type environment. That's when I thrive the best. So that's what I do. You know what I'm saying? I thrive the best in that type of learning education. So that's what I do for other people who like to learn as I like to learn. All right. So y'all get in there, man. Today the last day. Take advantage. Then after that, the Magical Fibonacci tool will be there on my WAP, link in the description below. If you come back tomorrow and you click one of the first 2 links, the Cohort or the Pacesetter Labs, you're not gonna be able to purchase it. But the Magical Fibonacci, the pro level sprint, it'll always be there. It'll always be there, always be available. Now, it always disappears when he says tap in. I appreciate that. Y'all give it up for Here to Learn and Share. Hey, check this out. Now, WAP has seemed to fix their site. So if you purchase the Magical Fibonacci tool, right, I am forcing you to look at the prerequisite material, right? So when you purchase the Fibonacci tool, right, the first lesson of the Fibonacci tool won't release until 5 days later, right? When you purchase it, there's bonus content in there that's a prerequisite that you need to understand in order to be able to apply what you're learning in the Magical Fibonacci tool. So I have taken material from the Smart Money Manuscript, and it's bonus material that you get for free when you purchase the Magical Fibonacci tool. But you don't have to, but it's the Magical Fibonacci stuff is not going to unlock until 5 days after. The first one is going to unlock 5 days after you purchase it. Then the second lesson, 6 days, 7 days, right? Got it on a drip feed thing. So I'm forcing you to look at that prerequisite stuff. And then you take it one day at a time. So after 5 days, that first lesson to unlock and the quiz for that first lesson to unlock. Right? Same way the Smart Money Manuscript was. You got a lesson and a quiz that goes along with it. Lesson, quiz that goes along with it. Right? And those who got the Smart Money Manuscript, the quizzes and everything, they seem to be working again. I know at one point in time, WAP was having issues with their site. The quizzes wasn't working. You know, they was giving me a run around about when they was going to fix it, but it seems to be working now. And then the drip feature is work. Like when I set up the Smart Money Manuscript, the drip feature wasn't working, but the drip feature seems to be working now. Right? And if there's anybody here who has purchased, let me know when you log in, is the drip feature working? When you log in, do you see the bonus material? And then for the Magical Fibonacci material, it should say available in X many days. It should be showing you a thing saying it's available in X many days, right? Confirm that for me if you are in here. Now, without further ado, let me open up my charty tarts. All right, who we got up here? Who we got up in here, man? I see Deborah up in here. I see Steve up in here. I see Here to Learn and Share up in here. I see Valentine up in here. Hola, Valentine. Hey, I see more numbers than I see names, but them all the names that I see, so them all the names that I'm gonna say. Here, man. Let's turn our attention over here to the tarty tarts. All right. Oh, y'all got me tripping, man. Good afternoon, man. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, but thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That just mean Big Spider Vito Hablo Espanol. And you're now in tune to another episode of CNQ Futures Weekend Chart Prep. Yeah. And this episode of the Weekend Chart Prep is being brought to you by the Magical Fibonacci Tool. Trading secrets that feel illegal to know. Let him cook! I hit the wrong button. I tried to hit the clap and I hit that let him cook button. How y'all doing, man? Hopefully y'all been having a good week. Everybody been having a good weekend, man. How y'all weekend been? How y'all weekend been? Had a good weekend? Steve, your weekend been good? Deborah, your weekend been good? Let's learn this shit. Your weekend been good? How y'all weekend been, man?
Yep, man. It's been great.
Been great. Yep. That's good. Good. Mine has been fantabulous. Too bad it's been very rainy in Columbus, Georgia. It's been very rainy in Columbus, Georgia. But other than that, weekend been amazing, man. Weekend has been amazing. I'm gonna jump over here to a monthly tarty tart. Remember what we talked about? Was it last Sunday? When was it? It was last Sunday. We had went to the monthly chart and we was like, how is this month going to end? We was like, is it going? Whenever it was. Oh, it was the last day of the month. It was Friday, and we was like, is it going to close right up, off the high? And as we can see, it's another very, very bullish month. Right? Another very bullish month. We have just been running. Right? This is May, April, and March. Right? May, April, and March. Right? So we got one more month left for the second quarter. Somebody check my math. Am I right? We getting ready to go into the last month of the second quarter. Is that right? Check my math, Deborah. Is that right? January, February, March, quarter one. April, May, June, quarter two. Thank you, Here to Learn and Share. Y'all give it up for Here to Learn and Share, because Deborah, I don't know if she's thinking about some saline right now, if she thinking about some insulin, if she thinking about did the person in 17B get they right medication. I don't know what she thinking about right now, but hey. So we got one more month left in the quarter, so this quarter has been a rocket ship so far. Right, so we started the quarter off just going up. April, May, right? How are we gonna end this quarter, right? Tim, what he talked about? Let's go to a 3-month chart, right? See right here, this is what this quarter looks like so far, right? So this quarter right here, right? If I hover over there, you see this right here says 1/2/26. I mean, it started on January 2nd. That's the first quarter, right? So that quarter we retraced back down, right? We retraced back down into the wick of this bullish order block. Price displaced away. We got a fair value gap there, right? That right there would be your change in the state delivery. We trade down into that wick, right? And then right? You mean tell me this thing works on quarterly charts? Yes, price is fractal, man. It does the same thing over and over and over and over and over again. Let's look at the continuous contract so we can get a better look at what we're looking at. All right, so that's the continuous contract right there, right, on a quarterly chart. All right, that's a quarterly chart on a continuous contract there. This is what we was looking at. All right, this is the little area we was paying attention to there. If I pop over here, just change this to the NQ, go to a quarterly chart, right? See there, that little close, right? So from that little quarter there with that little stubby thing there, right? It looks different on this one because this is the continuous contract, right? This contract has a lot more information than the front month. On the front month, that's all the information you got. So you don't have all that full information, right? You got this full counter, that full counter, that full counter, that full counter there. But that little stubby little counter there, right? That's that green counter there. So now everybody know what's going on, right? So if you look here on, let's turn, see when I turn the B adjust on, see how it's got down into that wick right there, right? Turn the B adjust off. You see how it's not down into that wick, right? Because we're adjusting for the inflation, right? We're trading down into that wick right there. And then when you're just looking at the front month don't have a B adjust. It's just, this is the price action once this month, once this started, that time frame, that contract started, that's the information that it was working with. You see we traded down into those wicks there. All right, so price expanded up, right? We got the displacement, right? Pull it back down into the wick of the bullish order block, splukatatow, right? So what is that? Consolidation, expansion, retracement, delivery, right? So we're in that delivery phase, that distribution phase, right? Right, we're in that distribution leg, right? This was the manipulation. So quarter one was the manipulation, right? And then now we see here quarter two, we have been distributing, right? It was accumulating, manipulation, and distributing inside quarter two. So now we're getting ready to go into the third month of quarter two, right? How will this quarter end? Will we end this quarter by backing down and closing off of the high, right? You know what I'm saying? Open up, small move down, expand up, and come down and close somewhere off of the high, right? Is that how we will end this quarter? Or will they keep just squeezing it till the cows come home? Who knows? Who cares? But as we see when we look at this quarterly time frame, right? Price is doing the same thing, right? Price is doing the same thing even on this quarterly chart. Price is fractal, right? Price is fractal. It does the same thing over and over and over and over and over, from time frame to time frame to time frame to time. That's why you can't let people trick you into thinking that the intraday time frames are just noise. The intraday time frames don't hold any value. They don't provide anything. How do you think that these quarterly candles get made up? Right? What is a quarter? What is a quarter for like the time frame? What makes up a quarter? Somebody tell me. What makes up a quarter for these
3 months?
3 months, right? So if a quarter is made up of 3 months, that means I have to go down to a monthly time frame to see what made up this quarter right here. Matter of fact, let's do that. Let's go through and see if we can debunk this whole lower time frames are noise, right? So I'm gonna highlight this. Matter of fact, let's do this right here. I don't know what I might say something that I like, so I'm going to record this real quick. And if I say something that I like, then I will use it as a gems from the live stream. And if not, I got it anyway, in case I don't say anything I like. All right, so we're going to try to see if we can debunk this whole the lower time frames are just noise. They don't provide any value, right? So we're going to get this is the quarter that we're in now. We're on this quarterly chart, and we're going to go back here to the first quarter. This is the first quarter of 2026. This candle here is showing you January 2nd, 2026, right? And you can see that it's a quarterly thing, 3 months there. So as Deborah so eloquently let us know, that a quarter is made up of 3 monthly candles, right? So when we're looking at this quarter right here, so I just highlighted that quarter there, right? So if we say a quarter is made up of 3 months, right? In order to see how this quarterly candle was formed, we have to at least drop down to the monthly time frame and look at the last 3 months. So when I highlight this one quarterly candle, right, and then I switch over to a 1 month time frame instead of a 3 month quarterly, right? Now, as you can see, I now have 3 monthly candles highlighted, right? But I didn't change anything. All I did was highlight 1 monthly candle, right? So based off of, let's just say we're just gonna say we have each month is roughly how many trading days, right? Who can give me a number? Roughly how many trading days is in your typical month of trading? Does anybody know?
10?
20.
20.
I meant 20. Yeah, 20.
Yeah, get back to your cabbage. 20. Right? So it's roughly 20 days in a trading month, right? So if I want to know what happened in each one of these trading months, right, I would have to go back and look at least the past 60-ish trading days, right? So that means I would have to go down to at least a daily time frame, right? So now I'm looking at 1, 2, 3 months, right? And I know that makes up the full first quarter, right? January, February, and March. And if I want to see what happened to create these daily candles here, that means I would have to go down to at least a daily time frame, go to 1D instead of 1M, right? And now, as you can see, right, now I have let's see how many days was in this quarter, actually. So from here over to there, right, we got 61 days in this quarter right here. I went past that one there because we want to count that one, right? So 61 days in that quarter. Man, we gave it a rough 20, so that's good. Good enough for government work, right? So we're looking back over 61 days there, right? So now we see we got 61 days highlighted, okay? So if we don't go down in time frames, what are we missing, right? We say we go up for what? Up, going up gives you what? Going up gives you what? When you go up in time frame, what does that give us? What do we say? We're going back now, stacks on stacks. Going up in time frames give us what? Narrative. Give it up for here to learn this shit, man. You go up in time frames to get the narrative, right? It gives you the overall narrative. It tells you what price is drawn to, what is price trying to get to. It gives you the narrative. It gives you the bigger picture of what's going on. And we go down in time frames to get what? We drop time frames to get what? If we go up for narrative, y'all get up for here to learn shit. Details, right? We're coming down in time frames to get details. So it's not noise as you go down, it's the details that's building out the narrative, right? It's the details that's building out the narrative. Because when we go to we're going to go back up. That's the daily time frame. We're going to go back up to a quarterly time frame, right? So when the fourth quarter ended last year, y'all can't see that wick. All right, let me make sure you can see the wicks. Okay. So when the fourth quarter ended last year, right? And the first quarter began, okay? When the fourth quarter ended and the first quarter began right here. So the first quarter began, this is where the first quarter opened, right there. We're gonna make that orange for open. That's when the first quarter opened, right there. Stretch it out so y'all can see it good on the chart, right? That's when the first quarter opened. Q1 open. All right. That's when the first quarter opened right there, okay? Stretch it out some. Make it bigger so it looks kind of small on my screen. Maybe I just got my screen small, but I want to make sure y'all can see it pretty good. Okay, so when Q1 opened, if you're watching this quarterly chart, what are you gonna make your trading decisions also off of? For right now, ain't nothing wrong if you trading just based off the quarterly time frame, right? That's cool. What are you going to trade based off of, right? If you're trading based off the quarterly time frame, what are you going to trade based off? Because right now, right, you got your narrative. Your narrative is price is bullish, right? Your narrative price is bullish, right? We came here, we consolidated, we expanded, we retraced, then we came back above the high right here, right? So if you didn't get in down here off this retracement back into this order block right there, right now price has expanded, right? When price opened up here on quarter one, right? Now what are you doing? You're waiting for price to come back down, right? Maybe into your imbalance, maybe into your order block right there. So now based off this time frame, right? You're not doing anything until, you know, it comes back down and gives you a reason to buy in a discount. All right. Until it comes back and gives you a reason to buy in a discount, right? That's our order block there. We got this long erroneous wick right there, right? So we're going to this rejection block, going body to body, right? We're looking at our bodies right there. While we're looking at our bodies, because we got this balanced price range right here that we've left, right? We come down, find support on that balanced price range, and we're just looking at this right here as a wick that's just doing damage, right? The bodies are unwilling to even trade back into this, so we're just coming to the low of our order block. We're not going to that erroneous wick down there, right? We're going to the low of our order block because this is a high time frame that we're looking at, so we want to look at the meat and potatoes of the price action, like, you know what I'm saying, like that. See, body to body, right? If you look body to body, you can still see we just tapped into a discount right there, right? Body to body, up that body a little bit higher right there, highest body, lowest body. You can see we still tapped into a slight discount right there, right? Because when you're on these higher time frames, you really want to focus on the meat and potatoes of the move. That's where your primary focus is. And then you still want to know what's going on with the wicks, right? But when it's a long erroneous wick like that, you know what I'm saying, it's a shorter wick up here, so we're just going from our order block to there. All right, little sauce I just sprinkled in there for free. All right, so you're waiting for it to come back down to give you a reason to buy in a discount, right? And so, right, you pretty much had to wait this entire quarter. Why? Because we came down, right? And then we closed the quarter right there. So pretty much 3 months. So sometime during them 3 months, you got an opportunity to buy in a discount down here inside the wick of this bullish order block. All right. Now, again, if you was waiting for the order block price, you didn't get opportunity. But if you bought inside the wick, you got an opportunity. But what could you have done to assist you in your trading decision, right? Dropping down in time frames to get detail about how price is respecting or disrespecting the narrative of this bullish order flow, right? So if you start to drop down in your time frames, instead of being on a quarterly, you got your quarterly levels, then you just go down to that monthly time frame. All right, now we're gonna move it over here to this monthly candle here. Move this wick over here so y'all can see that wick. All right, that's our monthly wick there. Just getting these, showing these long wicks on the top and the bottom. And we want to be able to see them wicks on the top and the bottom because they don't be showing up all that good. All right. So now, as we see here, okay, now that we on a monthly time frame, right? Now that we're on a monthly time frame, as you see with more detail, now you said, okay, my quarterly has expanded up, right? We've expanded up on the quarterly time frame, right? And now on my daily, my monthly, I can see that I have a monthly BSI, right? That's resting right there, right? And then we got a breaker block here, right? Overall, that's a mitigation block there, right? But this is the last up close candle. So I got confluence of a mitigation block or breaker block, whichever time horizon you're looking at, from back here or from back here, right? Breaker block if you're looking at it there, mitigation block if you're looking at it there, right? But we got that confluence in that area there on the monthly time frame. So this lower time frame noise, because think about it, oh Tim, that's a monthly time frame, why are you calling it lower time frame? If you're looking at a quarterly time frame, right, this monthly time frame is 3 times smaller than that time frame. So you're going into the noise, if you will, from that higher time frame perspective. But this is where you're getting the detail to say, okay, now that it's come back down into the discount, I have a PD array that I can now trade off of, right? And now I have an area where I can manage my risk more efficiently, right? I got a reason to enter based off of algorithmic reasoning, and now I have areas where I can manage my risk more efficiently, right? My mandatory stop is here based off this fair value gap, but then I see an inversion fair value gap here and a BSI here. So now I can manage my stop by placing my stop just below consequent encroachment, right, of this inversion fair value gap, or consequent encroachment of this SIBI right here, this BSI right here, right, and save a little bit of risk. Because now, right, if I push through that PD array, if I push through that PD array, and if I push through that PD array, that's 3 PD arrays that I'm violating, right, when I shouldn't, because now this is a balanced price range, right, and this area should support price. So if I slip through 3 PD arrays, there's no need for me to have my stop way down here or way down here, because if I come through all of this, I'm probably wrong, because all of this right here is designed to protect that institutional sponsorship, because we see a displacement down into sell side liquidity, and then we blast off, get displacement with a change in the state delivery with evidence of buy side liquidity left in the market after we displace down. That's institutional sponsorship. It left a bullish order block and wait to block price from coming back down, and it's protecting my investment where I bought from these willing sellers down here below this low. And now as I go up, I'm going to protect this investment, so I don't want price to dig back down into there. But this monthly time frame is giving me those details. I can't get those details from the higher time frame, right? And then you just go through and you can fine tune everything, where now on the higher time frame, everything is bullish, right? And when this quarter opens, right, this is where the quarter opened, right there, right? So when everything is bullish in the quarter open, and I'm anticipating price to come down here, now on my day-to-day trading, if I go down into a daily time frame, right, and I can see that, let me get these wicks out of the way now. Don't need them no more. Right now I come into my daily time frame and I can see that this is where we opened up at. We opened here, right? And price is bullish overall, and I'm anticipating it to come down into this discount PD array, because I want price to come to a discount so that I can buy for my swing trades, my long-term portfolio, whatever. So now during my daily trading, right, I can look for signatures if I want to trade against the grain to trade back down into this area. Why is that? Because I see that we consolidated here and then we blast off, right? So since we consolidated here and blast off, I can look at this as an initial consolidation, and we came here and dropped down and got this bearish break in market structure. I can look at this as a possible smart money reversal. And so now if I'm looking at this as a possible smart money reversal, right, when this quarter opens up, now I'm looking for a low risk sell, right? So when this quarter opens up and we pop up above this buy side liquidity, fail to take out that, and then we drop down here, right, trading below these bodies right here and taking out these lows right there, right? Now I'm looking at, that's my low risk sell, that's my smart money reversal. So now I'm looking for an opportunity to go short, right? So once we get our low risk sell, we trade back up into our bearish breaker there, right? We consolidate there for a while, engineering liquidity, and then we finally drop down and come down into our monthly bullish fair value gap. And we can also see that we come down into the first BISI that was created there, right? And not only do we come down to the first BISI that was created there, let's go to the bodies. Let's look what the bodies did, right? The bodies are inside that SIBI right there, right? The low of the wicks are inside that SIBI right there. What is that SIBI? That's the first SIBI that was created on that move down. So that's an inversion fair value gap. That's a bullish fair value gap. That's a reclaimed fair value gap. All in confluence right there, comes back down there below, but you wouldn't have that detail about what's going on, so you can short down to your anticipatory reactionary point, or you can wait for it to hit your anticipatory reactionary point with this lower time frame confluence, right, and then buy there. And now if you're buying here based off the daily time frame, if you're buying at this BISI right here, your mandatory stop is now there, right? Now your mandatory stop is here. So now you got a far tighter risk to reward, right? Let's just map it out, right? If you enter in here, right, now your mandatory stop is here, just below that low there, right? And we just put that up there somewhere, right, and stretch this out, and then we'll go back up to a monthly chart, right? And looking at the monthly chart, right, let's get all this other stuff out, all these drawings out of the way, right? So now that's off of our daily chart, right? If you were to enter based off your daily chart with your mandatory stop on your daily chart, right, then we said, let's move this over. I can't copy this. Oh, there it is. All right. Now, if we enter based off our monthly chart, when we go there, right? Remember we said our mandatory stop was the low of there, but we could use our consequent encroachment of either this fair value gap there, right? The inversion fair value gap, if you set it below the consequent encroachment of the inversion, or if you set it below the consequent encroachment of that one there, right? Whichever one you feel comfortable with. Since you got an inversion there, you say, I want to be comfortable, I want to stick with the inversion, right? A little bit safer. That's your risk to reward based off your monthly chart, right? And then if you look at your quarterly chart, right? If you look at your quarterly chart here, right? If you coming in and you're trading based off of, okay, I'm trying to get picked up on the high of my order block, but I got to go to the low of my order block there, right? But if I'm really convicted in the move, I can go with mean threshold of the order block. But since it's a higher time frame, I want to look at the meat and potatoes, right? So I'm going to go with the body. So below the body itself, right? Roughly it going with the low would be all the way down there, right? And then going with the mean threshold of the body is roughly the same area as the monthly, right? So roughly the same on the monthly and the quarterly time frame. But looking at the quarterly time frame without the understanding of the lower time frame, do you really trust trading that high right there? So on the quarterly time frame, I'm willing to say you don't even have a reason to buy when it first touches that, just looking at the chart, right? I would be more leaning toward if we touch the actual open of the order block, right? Can't see the way. If we actually touch the open of the order block, then that may be more of a buy-in signal based off the quarterly, because we don't have any information. Or you could say if we touch that fair value gap right there, right? So we want to see if that's a discount, right? Come to the high, down to the low of our order block. So the fair value gap is a discount. So if you say, okay, I'm doing it based off my fair value gap, right? Fair value gap is a discount, right? When you touch the fair value gap, right? For a fair value gap, right? Since this is an erroneous wick, we're not going to go all the way down there. We're just going to go to the low of the order block. We're going to use the low of the first candle. That second candle, it's like a huge erroneous wick, and we're looking at this as a implied fair value gap because we got these overlapping wicks. So we would need to map out that implied fair value gap. Let's do that properly. All right, so that wick to that wick, that wick to that wick. All right, so then your entry will be like right there on the implied fair value gap. And then, did I move the wrong one? All right, your entry there, and then your stop would be the low of the candle number one, right? So there's different scenarios, different risk to rewards based off of, what's being traded, you know what I'm saying? But that lower time frame information, that is not noise, right? So based off the daily, right, you're looking at a 5-to-1. Based off the monthly, you're looking at a 2-to-1. And based off the quarterly, you're looking at just over a 1-to-1. Just based off to there. That's just where I stretched it to. So you get the idea of what I'm talking about. That makes sense to everybody? That makes sense to everybody? Trying to debunk the idea of that the lower time frames are noise. No, those lower time frames are important. Well, Tim, you never went to a lower time frame. You went to a day. If you're looking at the concept from a quarterly down to a daily, right, you have gone 60 times lower, right? We started at a quarterly. We already saw that it takes 60 days to make up one quarter. So we've went from a very high time frame to a very low time frame, right? That's just like going from an hour to a minute. It takes 60-minute candles to make up an hour. It takes 60 daily candles to make up a quarter. Going from an hour to a minute, from a quarterly to a daily. Y'all get it?
Let him cook! I said let him cook!
Y'all do me a favor, hit a like for the algorithm. Subscribe to the channel if you ain't subscribed. Yeah, man. I think that was pretty insightful, man. What y'all think? Did it help anybody mental out? Did it help anybody mental out? Hit learn to share. This dissertation that you put over there, you need to put on speech to talk. I mean text to talk. Put on text to talk. Somebody read that dissertation that Hit Learn and Share typed over there to me. Somebody in the Zoom chat, read that dissertation that Hit Learn and Share. I keep forgetting that you can go through the candles like that. My mind automatically thinks that once candles cover the area, we no longer have interest in the first section of the candle. Speaking of the area where you mentioned the first Sibby and the first Bessie. I'm glad you said that, Hit Learn and Share. I'm glad I read that dissertation, right? For those who don't know, right? Shout out Tix to Riches. Tix to Riches, that's my first time seeing that name. If this your first time tuning in to Tim's Tidbit, welcome. Y'all give it up for Tix to Riches. I ain't never seen a name before. If you've been here before, you've been lurking in the back, I appreciate you for coming back. But if it is your first time, please hit the subscribe and hit the like for the algorithm and share to somebody who you think might get something out of it. All right. PD arrays never go stale. Right? PD arrays never go stale. Right? If price is trading in the vicinity of an old PD array, right? What do we want to whip out? And what tool do we want to whip out and use when price starts trading near a old PD array? What is the tool we're going to reach for to help us make our trading decisions when price is trading near an old PD array? What tool are we going to reach for to help us make our decisions for our trade entries and exits and profits? Maybe, baby, what tool will we reach for? Yolanda, what tool we reaching for? Hey, where Deborah went? I can't mess with Deborah no more. Oh, there she go. I thought Deborah had choked on some cornbread. She was eating cabbage, y'all. Yolanda, what tool are we gonna reach for?
The Fibonacci.
You feel me? We are gonna reach for the magical Fibonacci tool because it reveals trading secrets that feel illegal to know. Hear me? We're going to reach for our magical Fibonacci tool because when we're trading into an old PD array, right? Let's look at this right here. We were just looking at this example over here, right? We were just looking at this example with Hit Learn Share said, oh, I keep forgetting to remember to look back at them old Bessies, right? Okay, so this right here is the wick. This is the wick on the quarterly bullish order block, right? Let me draw these wicks out again because I know it'd be hard to see them wicks when I be moving my chart around. They be thin. I can't thicken up the wicks. I wish I could make the wicks thicker, but I can't make them thicker, right? Because there's a little baby daily wick right there. It's a green one right there. I know y'all probably can't see that green wick right there either. All right, I wish I could make them thicker, right? But I can't make them thick. Okay, so that's the wick of that monthly bullish order block. Let me name that real quick. All right, order block, monthly bullish order block. Boom, right? So we got our monthly bullish order block, monthly bullish order block, monthly bullish order block. Okay, so we got a monthly bullish order block. All right, so I mean a quarterly. I'm sorry, quarterly bullish order block. Right now we're going to drop down into a daily time frame. Cause remember that's what we had dropped down to, right? Now that we drop down into our daily time frame, right? When we look over here, we see that we have, get out of here, Wick. No, I leave it there. I'll just hide it. I'll just leave it there. I'll leave it there. No harm, no foul. I'll scoot it over to where it is on the daily. And then I'll hide it. You know what? I'll put it behind. I'll put it behind the candles. That still look crazy. Let's thin them down some. All right, there you go. All right, so then we'll go over here and we will look at that inversion fair value gap. Tim, what makes that an inversion fair value gap? Glad you asked that question, little Timmy Rogers, right? That SIBI, that right there that we was looking at, that's the first SIBI that was created on this move down right here. The first SIBI that was created when the elephant stepped in the pool. Okay, so when the elephant stepped in the pool, whenever you're looking to use inversion fair value gaps, you always want to look for that first one when the elephant stepped in the pool. Right, that's the first one. Right, so when we get back above it, right, we're anticipating this to be used as support. All right, now let's peep this out. Remember what Hit, Learn, and Share said. She said, I keep forgetting to look back over there at them old PD arrays because price already traded through them. See, price came here and traded through there, and we just kept going up. So when I look back over here, right, I see that Bessie there, but I keep forgetting about those PD arrays over there. All right. Now, what do you notice about these bodies? What do you notice about the bodies of these candles right here? All right. When I blow this up, I thicken that up. That right there, that red dotted line right there, that is consequent encroachment of not this Bessie right here, but this SIBI right here, right? That's consequent encroachment of that SIBI, right? We got a little teeny, nope, there's no volume imbalance there, so we got to get that right. There's no volume imbalance there, so we got to get that right. All right, so we don't have a volume imbalance there, so we got to get it right. So now, not just the bodies, but what do you notice about the candles in all? Right? Healthy respect for consequent encroachment of that SIBI right there. Right? That first SIBI, right, as we drop down there, there's your inversion fair value gap. Initially, it looked like it was a space there, but it wasn't. But we got to mark it right. Right? Now, you have this Bessie right here. Okay? So, Tim, I thought you said you was reaching for the Fibonacci tool. Right? I was, but this gives me the same benefit of that. But now we're going to go to our Fibonacci. I was drawing out the box. Now we're going to go to our Fibonacci tool. Right? We're going to hide this. Right? We don't even have to hide it. We're just grading it, because you get your Fibonacci tool, right? And you want to grade it. You can put it in the 8th grade or the 4th grade. The 4th grade is quadrants, right? And if we go from the high to the low, Now you have it broken to 4 equal sections. And you see that red line in the middle? That's the middle. That's the 50%. That's the consequent encroachment. We have the upper quadrant, consequent encroachment, lower quadrant, right? And when you're trading, right, that Fibonacci tool grading that PD array, it's showing you the strength of the buy or sell program. All right. And as we come into that inversion fair value gap, right? Tim, why are you looking at the inversion fair value gap? Because Michael taught us whenever we have an imbalance, right? This is an important imbalance. It's the first BISI created on this move up. Whenever we have an imbalance on the left side of the curve, this is where he's placing the emphasis. He's placing the emphasis on the imbalance on the left side of the curve, right? This one is on the right, this one is on the left. Okay, so as we're looking back here, this is the first one you get to, and if we go farther to the left, there's an imbalance there. So you got that inversion fair value gap, right? So when price comes down, he's putting the emphasis there. Why? Because we have a bullish breaker right here, and inside that bullish breaker is an inversion fair value gap. And he taught us when there's an inversion fair value gap inside your breaker, you want to buy that inversion because it's going to give you a better price than buying the breaker, right? So there's several things that he's taught us about using that true inversion fair value gap. Now, when you come over here and you have your magical Fibonacci tool, it's showing you on this day of the 30th, we traded down into the first quadrant, right? That up, not the first, but the upper quadrant. And what do we say we want to see at the upper quadrant? We want to see a range with sensitivity, right? And what do we get there? We get, and we took, whoa, like a hot plate, right? We came here, we went all the way up here, then we came all the way down, and when we touched that upper quadrant, right, we couldn't even get to the consequent encroachment, like a hot plate, got up off it. Get up off me, right? And that right there was on a Monday, right? And then what happened on that Tuesday? So look, this is a Monday, right? This is a Monday right there. We're coming into a new week, right? What is this candle telling us? Are we going up or down? Do we know? Right? We went all the way up there. We went all the way down there, and we closed right there. That candle right there, it's not giving us a whole lot, right? So when we got a candle closing all a small body candle like that, we went way up, we went way down. What do we say happened that day? That was a consolidation day. That was an indecision day, right? AKA what? Accumulation. Accumulation. And now we're down here at a discount anticipatory reactionary point in the midst of a higher time frame anticipatory reactionary point. And it just so happens, right, that we open up on a Tuesday and we drop down and take out sell side liquidity, right? We fail to get to mean threshold of that wick, well, consequent encroachment, because it's the wick of the order block. We fail to get the consequent encroachment of that wick, and then we take back off to the upside. So what does that look like to you? That looks like consolidation, expansion, and reversal. Why do you say that, Tim? Because if we trade below the low of this day and then rally back above the high of that day, that gives us a bullish Judy swing. So we're coming into the beginning of a week, we accumulate or consolidate, we consolidate or accumulate, and then we drop down into the sell side liquidity and blast off to the buy side liquidity. That sounds like a Judy swing. A Judy swing is another term of manipulating price. Wait a minute. Accumulation, manipulation, that sounds like we're starting a power of 3, an AMD. So if we consolidate, expand, reverse, now I'm looking for a retracement, and we get us a retracement into that fair value gap right there. And then we continue up. So now we got consolidation, expansion, reversal, retracement, delivery, all off the back of a very old PD array over here that we forgot to look at because we're not Ant-Man. And then our magical Fibonacci tool was giving us the insight that we were seeing discount sensitivity, and then price was moving. It was giving us signatures. But wait, there's more, right? As we were up here consolidating, right? Consolidate. We up here consolidating, right? And then what is happening? What's going on, right? We have liquidity. We got all this liquidity resting up here as we took off to the downside into sell side liquidity. Wait, Tim, that sounds familiar. We have displacement to a discount, a sell side liquidity raid, and evidence of buy side liquidity left in the market. That sounds like institutional sponsorship. So that means that if we come up here and we get an inversion fair value gap right here on the daily time frame, that I can trust buying this inversion fair value gap, because that's the first SIBI that was created when it displaced down. And when we came back up and we came above this SIBI and closed above it and got an inversion fair value gap, if price dips back down into it, I can buy it and trust it, because this bullish order block is going to protect these lows, and I can trust that we're going to go up because the algorithm said so.
Let him cook! I said let him cook!
Y'all do me a favor. Hit like for the algorithm and subscribe to the channel if you ain't subscribed. Y'all already know what I'm gonna say. If there is anybody who thinks that I'm just a Monday morning quarterback and I don't trade this stuff live, y'all see that? Y'all see that right there? If you think me or the gang don't actually do this stuff, y'all see it. Y'all see it. If you think, hold on. Let's say, what's going on, 16? 16 YT Codem. I don't know what that say. What's that? This your first time here? This is great review. I took 3 months off since the war started, and I'm starting back on the charts tomorrow. That's what's up, Ticks to Riches. That's what's up. Great time to be in the market. Any time is a great time to be in the market. How do I start? I'm a beginner. My mentor told me to learn the basics. Hold on, 16. Hold on, 16. 16. I'm just going to call you 16 because I don't know what the rest of that means. 16. Let me ask you something. 16, you say, let me back up so my head ain't cut off. 16. Rest of y'all go talk amongst yourself. Me and 16 talking right here. Right? He said futures trading. He said futures trading, and he's very successful with it. I don't want to divert from what he said. 16. Right? If this ain't no knock on your mentor, right? I'm just keeping it 100 with you. Right? I'm going to read exactly what you said again. You said, how do I start? I'm a beginner. My mentor told me to learn the basics. If you have a mentor and he told you to learn the basics, but you're now on my channel asking me how to start, fire your mentor. Get a new one. Fire your mentor and get a new one. Because if your mentor was a true mentor, as you say he's successful and you don't want to deviate from what he said, you wouldn't be asking me how to start, because he would have given you the tools already. He would have given you the tools to study. He would have said, start here, do this, move on to this, do this, move on to this, do this. He would be taking you through the paces, and you have to do the work. Now, either you're not doing what he told you to do, or he's trash and you need to fire him. I'm just keeping it real. Ain't no time for sugarcoating in this right here. This a game of winners and losers. I don't care what nobody say. Trading is a game of winners and losers. If you win, you make money. If you lose money. Winners and losers. That's it. Ain't no time for no rose-colored glasses and perfume-smelling farts. All it is the real deal Holyfield around here. All right? Now, if you want to know how to start trading the ICT concepts, I always tell people go straight to the source, Michael J. Huddleston, and look at his core content, month 1 through 12. He got 12 months of mentorship. If you don't want to watch his content, I have playlists on my channel explaining the ICT concepts, the art of reading price action. That's a great one to go through on my channels, right? I got the ICT concepts explained. It's 3 different playlists. You got the lingo playlist. I got different ones. The art of reading price action, that one is like more concise. That's my favorite overall. Right, the ICT concepts is broke down into different stages. It's the same information, just broke down to different stages. But I like the art of reading price action because it was done when I was a little bit farther along in my understanding, and I think I did a little bit better job as explaining what was in my head. But both of them, those first 3 playlists with the ICT concepts explained and the art of reading price action, you can't go wrong with them. But I always say go to Michael's channel, the ICT channel, and look at core content months 1 through 12. It's a lot of material, right? But core content months 1 through 12. And guess what? He's got it designed so that it takes you a year to go through just learning the content. That's why it's month 1 through 12. Month 1, you should want the first month you studying, you should only be studying the content in month 1, right? And then you move on to month 2. And you don't stop studying month 1 when you move to month 2, stacks on stacks. Then you move to month 3, right? And then you're studying month 1, 2, and 3. Right? So in month 1, you're learning month 1, you're studying it. Month 2, you're learning month 2, reinforcing month 1, right? Month 3, you're learning month 2, reinforcing month 1 and 2, and so on and so on and so on and so on. That's the way it's designed to do. That's why it's 12 months, right? But everybody want it fast. Everybody want it quick, right? Stick around here. Yes, stick around here. Yeah, you just pull up. Just pull up around here. Matter of fact, you and your mentor pull up. I try to go live every night at 6 o'clock and do like recaps, right? Me and the gang, we get together Monday, Wednesday, and Friday, right, in the morning time. I come on public YouTube every Tuesday morning at 9 a.m. from like 9 to 9:30-ish. Right, every Tuesday morning. Then I try to go live every night at 6 p.m. You know what I'm saying? So pull up, man. You and your mentor pull up and come hang out with us, man. Hey, and if your mentor feel like I'm saying wrong stuff or I don't know how to do what I'm saying, ticks to riches, you can't join the Zoom because Them people like to pull up with the one-handed arm curl, them one-arm curls. They was pulling up with the one-arm curls, and I stopped putting the Zoom link in the chat. Can't nobody but the people in the gang get inside the Zoom link now. Hey, y'all know what, man? I was thinking the other day. I have been thinking long and hard, right? I have been thinking long and hard, and I ain't decided yet. I'm this close to deciding. But I think I'm going to do away with the link to be able to join the Discord. I think I'm going to do away with the link to be able to join the Discord. I'm not going to get rid of the Discord. Gang, y'all that's in there, you know what I'm saying? Y'all grandfathered in. Y'all in there. I'm not taking it away. Right? But I'm flirting with the idea of getting rid of the link to join the Discord. Why, Tim? Why you get? We gonna get to the chart prep in a second. This is what's been on my mind. The reason why is because I'm talking to the same people. I'm talking to the same people, right? I'm not reaching anybody new. I'm not reaching anybody new. You know what I'm saying? Nobody reaching nobody new. So, right? Ain't no need to promote a Discord that ain't reaching nobody new. All right, so, and I said, okay, it's either one or two things. Either people feel like I ain't got nothing to offer, right? Or I've just maxed out my reach, right? I know YouTube and social media is a young man's game. You know what I'm saying? Most, you know what I'm saying? Most people that's out there jumping into Discords, they just looking for something to get rich quick, right? When you get to people like, because most of my community, you know what I'm saying, everybody, they grown. And it ain't, I don't know of any little young kids in my Discord community. You know what I'm saying? If it is, I don't know, but most of them grown. You know what I'm saying? Grown people ain't got time to be spending a whole lot of money on nothing. You know what I'm saying? And they grown, they established, they trying to learn this the right way, do it the right way. Right? I really don't even want the riffraff around. You see what I'm saying? I ain't got time for the foolishness. I ain't got time for the riffraff. But, you know, since it ain't no get rich quick type thing, I ain't flashing no Lamborghinis. You know what I'm saying? I ain't putting people in my business with my P&L, and I ain't bragging about making $10,000 a day and all that. That ain't sexy. That ain't attractive. That ain't what people, you know what I'm saying? People want that get rich quick. You know? So, probably stop letting people in. Probably, you know what I'm saying? Take away the links for people to come in. Can't nobody come in. Either that or, right? Just charge people a whole heap of money one time to get into the Discord. And that's it. You ain't got to just pay a whole heap of money one time. You know what I'm saying? And you be in the Discord forever. That's what I've been thinking about. That's what I've been thinking about. Now, because I really want to protect the integrity of what we have. What's this rail? Oh, I need to get back on the front month. Y'all can breathe easy, gang. I ain't going nowhere. Y'all can breathe easy, gang. I ain't going nowhere. He said, hold up on that. I'll join on the first. Hey, Text the Riches. Ain't no need to join on the first. I'm still gonna be. Hey, I ain't saying don't. You know what I'm saying? You can join. You can join tomorrow if you want to. Come on, I'll welcome you in. But you know what I'm saying? If you coming in there looking for live trading and signals and all that right there, nah, don't waste your time. All right, don't waste your time. Cause we sprinting. We sprinting now. We to the point where we sprinting in the Discord. We've been together so long. You know what I'm saying? We to the point where we sprinting. All of the teaching stuff is behind us. When we come together, we, you know what I'm saying? We buy business. We buy business. But yeah, pull up if you want to. The link down there somewhere is below. It's below the Magical Fibonacci tool. Hold on. I got to go get my water. Y'all look at the commercial while I go get my water. I'll be right back. And then we're going to do our chart prep. Have you ever watched price hit your exact fib level, hunt your stop, and then explode into a massive move without you? You're not wrong about the direction. You're just acting as someone else's exit liquidity. You see, retail traders use Fibonacci to find support and resistance. But the market makers, they use those exact same levels to find your orders. Hi, my name is Timothy Lee Rogers Sr., and inside the Magical Fibonacci tool, I am handing you the exact institutional framework you need to flip the script. No more guessing, no more games, no more retail traps, just pure precision order flow. We are officially in the final countdown to the June 1st launch, so you can still choose your level of commitment across 3 tiers. We have the Pro Level Sprint, Pace Labs, and the Pacesetter Cohort. But fair warning, Pace Labs and the Pacesetter Cohort disappear May 31st. No games, they're gone. So don't look back on June 1st wishing you'd take action. It's time to stop feeding the markets, switch sides, and learn to hunt liquidity like the pros. All right, I'm back. That's shorter than I thought. That's a short commercial. You sprinting. Ooh, I was running. I feel like an old fat man now. Looking at our monthly chart. Since it's a new month, everything treetop tall. Delete all this other stuff off. All this old stuff we was looking at. Everybody know we've been looking at. Ain't no need to keep on beating a dead horse. All right, we know we've been looking at all this old stuff. All right, monthly high, monthly low. Right, that's our monthly high, that's our monthly low. As we see here, we have formed a monthly Bessie. Right, we see that we talked about price expanded up, retraced back down into a discount, into our discount Bessie, and we have taken off. Right, price has expanded up. We just created a monthly Bessie with the close of this May. We just created a monthly fair value gap. Got a volume imbalance there, so we go to the open of May down to the high of March. Right, reason why we're going to the open of May instead of the low of May is because there's a volume imbalance in between May and April, so you include that to get your complete inefficiency, right? And so that gives you your monthly fair value gap right there. That's what we just created when the close of that May candle. Right now we have officially have a monthly fair value gap. Right, price is in a very strong buy program. Right, and if we come here from our high, Let's get our consequent encroachment mean threshold. Go from our high, current high that we just made, stretch it down to our low, right? That's the low of our order block there, the low of this expansion leg there, right? Right now, where price is now, equilibrium of that range is down there at 26,748 and 3/4, right? That's equilibrium of the current price range as of right now, today, right? If we don't go any higher, that's our equilibrium. That's what separates the premium from the discount of our current expansion leg, right? When you're looking at your dealing range, right, from the lowest low to the highest high, right, you're always looking to execute in the latest expansion leg. So from our lowest low to our highest high, this low to this high is our latest expansion, right? Price went up, retraced to a discount, blast off, right? We still haven't got a retracement to a discount since we took off, right, at the beginning of April. Okay, we started to take off at the end of March because remember we traded down into the discount and we started to move up. Then April we did not make a lower low, we just continued higher. So right at the end of March we started this ascent and we haven't stopped yet. Nothing can stop me, I'm all the way up. All right, so now we see where we are. We're in extreme premium right now of our current dealing range. Okay, that's on our higher time frame. So if you make your swing trading decisions based off the monthly time frame, right now you're in an extreme premium, right? You're in extreme premium. So you know, if you don't mind buying swing trade, if you don't mind buying calls up here where you treat tippy top tall, knock yourself out. But me, I ain't buying calls for no long term. Like I ain't buying leaps up here. This ain't where I'm buying leaps at. I need some kind of retracement back to a discount, right? And if I'm doing it based off this time frame, I need to come way down here, right? Not saying we got to get there, but if we find ourselves down in this range here in the summertime, right? If we find ourselves down there in the summertime, hey, how about it? It's on sale. Let's see how much of a sale it'll be, right? From where we closed at this month here, right? If we came all the way down here below equilibrium, down to consequent encroachment of that monthly fair value gap, that's 12.5%. Yes, sir. 12.5% correction? Man, give me some 2-year leaps off that. Give me some 2 years. I don't care if it pulled back a little bit more. Give me some 2 years. If we got back down now in the summertime, give me some 2 years. You hear me? 12.5% discount? Boy, stop. In a monthly anticipatory reactionary point? Boy, stop. Inside a monthly mitigation block? Boy, stop. Give it to me. Give it here. Don't say nothing now. Give it here. Don't hold back now. Give it here. Weekly time frame. I get so weak in the knee, I can hardly speak. On to the weekly time frame. Y'all see that right there? See, this is what we was talking about before. See how that monthly candle is not on that wick right there? Who can tell me why that monthly candle is not on that wick right there? Who know why that monthly candle ain't on that wick right there? On that weekly wick. Who could tell me that? That's the wick right there. Who could tell me why that monthly candle ain't touching that weekly wick right there? Who know? Who know? Don't nobody know?
You saying why that monthly what now?
Why that monthly low right there is not touching that wick right there on that candle there? When I go to the monthly, see how I anchored it to that low right there, that monthly candle there. See how it's right there on that. It's right there on that wick. Like if I see, this is the monthly wick right there, right? See that monthly
That's the
wick?
monthly low.
And you see
Okay.
how I got that monthly low, right? And then when I go down to the weekly time frame, why that line ain't on that wick right there?
Oh, because that's you comparing 1 week in time with a monthly calendar.
Mm-hmm. And what does that mean right there? Since that's not touching there, it's over here in the middle. What does that mean?
That the monthly low was in the came back only into the body of the previous week.
Oh yeah, it was the monthly candle. The last day of the month was inside this weekly candle right here. So it's not going to be right on that weekly low, right? So that means you need to go down to your daily time frame and see now it's on the low of that day, right there, right there. That's on the low of that day. We made the low on the first day of the month, right there. That's your monthly low right there. On May 1st, we made the low of the month right there. And then prices continue to go up. And then so that's Friday right here. And then Monday, right? That starts the first week of the month. So that first week of the month is here, but the first started at the end of that last week there. That's why when you look at that monthly low seems to just be floating in space. Right, and I was bringing that up because the other night somebody was like, "Hey, why is that line just in the middle of that candle right there?" Right, when we was doing like the new week opening gaps, they're like, "What, shouldn't it be like at the high or the low of that candle?" But when you have stuff that pop up like on the time frames, like you get like a monthly or daily or a day that's a holiday, it's like it'll be looking weird when you go from time frame to time frame sometimes. That's why I wanted to point that out, so people won't go and be like, "Oh man, I need to anchor that there." No, you don't need to anchor that there. It's in the right spot. All right, so on the weekly time frame, our monthly high and our weekly high is going to be the same, right? Same date, same week. We made the high of the month. What is this? Oh, this the wick. Get out of that wick. Right. So weekly high, weekly low. Right. So our weekly high and monthly high are going to be the same price. Up there at 30,536 even. Our weekly low. Right. Down there at 29,000. 676 and a quarter. All right. Right now, as we see, we have, when we're looking at, we talked about we were billing out price. All right. We've talked about as we were coming up, as we were displacing up, we can see here, right, from March 30th, the week of March 30th, all the way through the week of May the 4th, price was just on a tear straight up, right? Non-stop looking back. And then the week of May the 11th, right, we had an indecision candle, right? And then after that, okay, May the 18th, took a little sell side, then we continued up. Now, this pause right here is very important, right? That pause right there is very important. Why is that pause very important, right? When we look over here, there's no structure. We're in all-time high territory. All-time high, right? We're in all-time high territory, right? When you're in all-time high territory, what do you have to create? You have to create price structure, right? You have to create structure. How is structure created? Structure, price action, it creates structure with ebbs and flows, right? If we're just ebbing or flowing, I don't know which is which. Who can tell me what's the difference between an ebb and a flow, right? Now I'm curious about it now, so now I gotta ask Gemini. Gemini gonna tell me. What's the difference? Wait a minute. It can't hear me? Check. What's the difference? Hey, what's going on here? Where's my settings at? How do I get to listen to my mic? Pissed off now. What's the difference between an ebb and a flow? I ain't say order block. Ebb. Hey Siri, how do you spell ebb and flow? Everybody want to act retarded today. Need 2 B's. I need 2 B's. Ah, that makes total sense. You're looking for a literal classic phrase, ebb and flow. Jump straight into the charts, blame it on my algorithm behind a bit too dialed into the market patterns. In everyday English, ebb and flow describe the natural rhythmic back and forth of movements, ocean. I know that, but what's the ebb? Okay. The flow, the flood tide. This is the incoming tide. It is the period when the water rises and progressively moves further up onto the shore. It represents movement forward, growth, and filling. The ebb tide is the outgoing tide. It is the period between the high tide and low tide when the water recedes, pulling away from the shore. So the ebb is pulling back and the flow is going up. Okay, I just learned something. So the ebb is the pull back and the flow is the going up. Ebb is the pull back, the flow is the growing. Right? So the ebbs and the flows. All right? When you got a sine wave, flow, ebb, ebb, flow, ebb, flow. Yeah, there you go. I got it. I just learned something. Y'all welcome. Y'all just learned it too. Y'all just learned it too. All right. So we got our weekly high, our monthly high. We're building structure. That's what I was saying. We're up here building structure. This is important, right? We've expanded up, right? We have placed a down close candle there and we have expanded up again. Now we're building structure. This is important for us to be able to start to determine, is price reversing? Is price continuing? What is price doing? Okay. Why is that? Because now we have a swing low in place right here. Low 1, low 2, low 3, right? We now have a swing low in place right there. We're starting to create structure, right? We had a low here, right? And we went up, up. And now we got a low there. So now guess what? Now we got us an intermediate term low. He looked like the Elephant Man. He looked like some Basquiat painted, right? But he still smiles because he's important, right? Now we got an intermediate term low down there. Price is forming structure. Structure is starting to be formed, okay? All right, everybody tracking? Everybody understand what's going on? Okay, now that we're up here, again, we're up here in a premium, right? We're up here in a premium. If you got long money, right? If you got long money and you like, hey, We up here in a premium. I got long money. I'm just going to short the market. That's totally up to you. Because guess what? Turtle soup style traders, right? Not the true turtle soup traders who buy on breakouts, right? Not the, I shouldn't say turtle soup. Not the turtle traders that buy on breakouts, right? Turtle soup traders are the people that are fading the turtle traders, right? The turtle traders, for those who don't know, it was like, I think it was like a group of like 20 people who ain't never traded in their life, and their strategy was just to buy on breakouts. Buy every breakout that you saw, keep a tight stop, right? They lost way more trades than they won, but they were wildly profitable because when price break out and do this gain was 100 of their losses. You know what I'm saying? I'm just throwing numbers out there, but it was like they were wildly profitable, right? And the turtle soup comes from fading them turtle traders. So some turtle traders bought on this breakout above this high. If you are a turtle soup trader, right, you're selling to those turtle traders that's buying on that breakout, right? Now, what's the disadvantage to us? We're not IPTA. We're not IPTA. We don't know how far IPTA is going to take this, right? We don't know how far IPTA is going to take this. The only thing we can do is rely on our tools to give us a anticipatory reactionary point and then gauge our risk, right? So let me put this on this time frame so I can see it on this time frame, right? So if I come in here, right, to my projections here, right? So now I can say, oh, I see that we're above my 2 standard deviation and we're approaching my 2.5. Now I can say if we hit 30,833, right, and I'm a turtle soup trader, this can be my price I want to sell. All right. Instead of just selling that high, right? Instead of just selling this high at 29,782 even, right? Instead of just selling that high at 29,782 even, right? Now I can come in here and have a algorithmic price level, algorithm price point that I want to sell to a turtle trader, right? Somebody that, and I'm going to be I'm not going to be selling to that turtle trader, right? Because he's already in for the long, right there, right? I may be selling to one that's trading above this monthly high right here, right? I might be selling to one that's trading above this monthly high at 30,536, right there, right? Or I may be trading to another one, but I can make a decision based off of my algorithmic principles. Hey, we're starting to form structure. We're in the extreme premium. We're getting ready to end the quarter, right? If we hit 30,833, I'm short in the market. This ain't financial advice. I'm just telling you how you can use the tools, okay? Now, Tim, what's my risk on this, right? What do we have? We have our next reasonable target, right? If this is my next reasonable target, okay, that's my next reasonable target, and this right here, so if that's a PD array, that's a PD array, right? What do we say, right? If we go PD array to PD array, right? And what are we looking for in between those PD arrays? What's that, 5750? All right. What are we looking for in between those PD arrays? Event horizon, right? So if I really believe in the short, right, my stop, right, my stop is going to be, hey, if I come up here and get a weekly close, because I'm trading off this weekly time frame, whatever time frame it is, right? So I'm looking at this weekly, so that's what I'm talking about. If I come up here and I get a closure above event horizon, and in this case it's 31,396.50, I don't like to trade no more, right? That right there is, right, basing it off of, hey, if I trade into this PD array, I want my best shorts to happen in the discount of this PD array, preferably not making it to the 25% or 31,117 even and going back down, right? And definitely if I get a closure above event horizon, right, I'm probably on the wrong side, so take me out, right? That's a more aggressive way to place your stop. Why? Because I'm just looking at, hey, I really want to see the institutional order flow entry drill, for lack of better terms, right? Or you can say, if we make it all the way to that point, just take me out, right? I'm wrong. They're squeezing it to the moon. If we take it all the way to that point, just get me out. All right. Now, I know these are very large ranges and you like, who got that much money? But it's the principle that I'm talking about, right? We're talking about if you, right, are interested in being a turtle soup type trader, right? You still want to do it based off algorithmic levels. You don't want to just say, hey, I'm going to short this high and hold it for as long as I want. No. Right? You want to have a especially when you got a strong buy program, right? You want to have a reason to be shorting, right? And just like in this case right here, right? If you were saying once we went above here, I'm going to short at the 2.0, right? And if it get past event horizon, take me out, right? That right there, it gave you a nice little retracement back down, right? Because we came down, came up, opened up, went down some more, right? Nice little pullback off of there. You know, I don't know how much you could have profited off of swings or whatever. Nice little pullback there. But, right? So you want to have algorithmic reasons for making your trade. It's so many ways to skin a cat. It's so many ways to skin a cat. There's not just one way to skin a cat when it comes to trading ICT concepts and any other concepts. It's so many ways to skin a cat. All right. I got a little sidetracked there, but we're gonna get back to it now. Weekly time frame, we traded back down into this weekly fair value gap and then continued up, right? So price on the weekly time frame, it's just been running, right? We still have not had any type of retracement on the weekly time frame, right? We've been going straight up. All right. So on this weekly time frame, we actually have three expansions that you want to pay attention to. All right. Our overall dealing range. That's our overall dealing range. That's the lowest low. That's the highest high. Overall dealing range, right? For the overall buy program, right? This is our latest expansion for the overall buy program. Discount equilibrium is down here. It's 26,748.75, right? That's just above consequent encroachment of the monthly bullish fair value gap, right? That's right down there where we was talking about, hey, if we got down there in the summertime, sign me up. Loading up the clip. Extendo. Switch it out. Brrr. Shoot it horizontal. Brrr. Right? Now, that's the first range you're looking at. That's our that's our current dealing range, right? Tim, what's the second? See this balanced price range right here? Tim, what makes that a balanced price range? Buy side delivery, sell side delivery, leave that area. Once you leave that area, balance price range, right? That's our balanced price range. So looking at our balanced price range, we don't want to see price digging back down into it, right? This was that's our high right there, right? Where did we leave that area? This candle from 420, that's when we're leaving that area, right? So we come there from that low of 420 up to the high right there. That's the second expansion range that you're looking at for this weekly time frame, right? So we're looking at long-term, intermediate, right? And guess what's the next one? You got long-term, intermediate, and then what's the last one? Long-term, intermediate, and what? Come on, get this doggone wick. Long-term, intermediate, and what's the last one? Somebody gonna talk to me? Hungry as I am, and y'all ain't gonna talk to me? Man, I get off this live and go get me something to eat.
Short term.
Short term. Shout out, that's my dog Steve. Was that Steve? Who that is? Who that was? Steve?
Oh, it's JT.
That was JT? That was JT. Oh, where JT slid up in here? JT, where you at? When you slid up here, JT? Who in here? Oh, we got JT in here. JT in here. Y'all give it up for JT, man. Short term. Right, so intermediate term. Boom. Short term. That's our short term right there. It's our short term range that we're looking at. Right? For the weekly time frame. Right? Got our short term. That's our expansion there. Right? We haven't come back down to a discount of that range yet. We just made that high. Right? This is our intermediate term there, right? And then our long term there, right? That's how we're basing that's how you would be basing your trading decisions off of your weekly chart. Those are your three time frames there, right? So looking at your current short term, right? Your current short term, trading back down and taking out last week's low, right? And trading down into this new week opening gap / volume imbalance right there. Now remember, this is our holiday new week opening gap right there, right? Remember, our official new week opening gap was like a little bit bigger because we had a holiday, but just based off of what the candles did now, this volume imbalance / new week opening gap down there, if we come down into that, that's bringing us back down into equilibrium at 29,599 and a half, into a slight discount of our short-term dealing range, right? Short-term time horizon, okay? What do we have up here in this short-term time horizon? We have a short-term low right there, right? We have a short-term low. So if we come down here, right, and take out that short-term low right there, as price sits right now, right, that gives us a bearish break-in market structure on this weekly time frame, right? Because that low took out that high, right? Now, this is what I want you to understand. This swing low is resting inside this fair value gap. So when a swing low rests inside that fair value gap of that expansion right there, Michael is not putting a lot of weight on that as a break-in market structure, right? He's not putting a lot of weight on that as a break-in market structure, right? Because price right now is just expanding. You're in the middle of this expansion right here, and you're sweeping out sell side liquidity. That could be very well more gas that it needs to continue up. So you don't want to just put all your weight on there like, oh, we're in a bearish breaking market structure, we're getting ready to go down, right? What do you want to look for, right? You want to monitor signs. Is bearish order flow still being maintained? So if we came down here, got this market structure break right there, came back up here, right? Came back up here. Now we've traded back down into this imbalance, right? Right. If we come in here and we make some type of structure here, but we're respecting, right, this upper half of this area, then we come back down and take that out. Now we got a smart money reversal and a low risk buy. Now we know that we're on the right side of the market maker sell model. We know that we got a bearish breaking structure, and now we're looking for opportunities to participate coming back down to our monthly anticipatory reactionary point, right? So Tim, do I got to wait for all of that to happen? I'm missing moves. No, you don't have to wait for all that to happen. You can trade how you want to trade, right? Like I said, we talked about, you can turtle soup here, you can turtle soup there, just start shorting there. Price come down, trade it back up, short it, but you just know your risk, right? Price come down, trade back up, short it here. Where's my risk? There or here or there, wherever you choose to place your risk, above the order block, right? Above the high, above consequent encroachment of something, you know what I'm saying? Whatever you choose as your risk, right? You just put on your manageable risk, right? Or you wait for it to come back down to a discount and then you buy, you put on your manageable risk, right? It's like that. It's more than one way to skin a cat, man. Those are your ranges that you're monitoring, okay? Our daily time frame, right? Our daily high, weekly high, and monthly high, all the same prices. Daily high, weekly high, monthly high, all the same prices. We made the high of the month, the high of the week, all on Friday. All right, so our daily high, monthly high, all of it is on at the same price. So I'm just gonna hide the monthly high for right now. I'm gonna hide the monthly high for right now and just show the weekly high and a daily high. I click weekly low. All right. On the daily time frame, okay, we did get this huge BISI right here we talked about. Right, that we did get a huge BISI, but now this BISI thus far has not created a new BISI. Right, we closed here inside this wick right there, so we didn't even have an opportunity to create a BISI, right? And then now here we got kind of a little stubby candle, so sort of like an indecision. So this BISI is not creating BISIs right now, right? When a BISI don't create BISIs, then that's a sign of slowing momentum, you know what I'm saying? A pause for the cause, right? It's not displacing. We need more information, right? We need more information. This BISI has not created more BISIs, right? When we left here, when we came out of here, this BISI created this BISI, right? This BISI did not create a BISI, right? So now we need more information. Is the momentum slowing, right? Is the momentum slowing? Over here, remember we said we're building structure now, right? On the weekly time frame, remember we said we had a swing low, right, that we had created on the weekly time frame. We got a swing low we had created, okay? Remember our weekly short-term range, right? This is that range right there from the weekly time frame. Let's pop back up for those who can't remember. That's that short-term weekly range. On the daily time frame, right? On our daily time frame, that's the same range. On the daily time frame, we have two ranges that we're watching. This is our overall dealing range, right? That's our weekly short term, right? But this is our overall dealing range on the daily. Okay? So for our overall dealing range on the daily, this is our long term right there, right? This is our balanced price range right here, right? So we're coming from there to there. When we leave that area, right? It's right here. It's our intermediate term on our daily time frame. And then for the daily, for our short term, right? Only thing we're just looking at is our last day's high and low, right? Right there. Our last day's high and low. That's our short term daily time frame. Our previous day's high and low, right? So that's our short term for the daily. Your intraday trading decisions, right? Intermediate term, that you can use that for like your whole week, like what you planning for the whole week, right? And then your longer term, looking at the daily, how you planning out the rest of the month. You know what I'm saying? Couple weeks through the rest of the month. All right. That makes sense to everybody? Hey, here to learn shit. Say it with your chest. Don't be retracting nothing. Don't be retracting those statements. That makes sense to everybody? Anybody confused about what I said? Anybody don't understand what I'm talking about? All right. That brings us to the end of the weekend chart prep. That's all I really prep. I do more as we're going into the New York session. We go in, me and the gang. Tomorrow morning we got pre-market analysis. Where we go in and look at what the price did overnight, and we get ready for our trading day. All right. So for right now, that's all I got. Unless anybody got anything for me, feel free to ask away. Somebody put up Friday and got a fully realized 101, a free 101. Somebody saved $150. Who remember who that was that pulled up Friday and was asking questions and saved $150 by switching to Geico? Sebastian, that's who it was. Saved $150. People ask me, Tim, how much your 101? I tell them, I'll be like, all you gotta do is just pull up. If you pull up and ask me a question, I'll run my mouth. But if you want to pay me $150 to talk to me for an hour, that's fine. Sometimes people be gun shy. They be ashamed of talking in front of people. I'll take your money though. I love money. I love money. I'll take your money though. Ain't nobody got now? All right, man. That's all I got. Y'all free to go. I'm just putting my lines down to the 1 minute time frame. Y'all know how I do. I like to have my lines all the way down to the lowest time frame. I like to have my lines all the way down to the lowest time frame. On the candle on the lowest time frame. That was me. Oh, what's up, Sebastian? Y'all get up for Sebastian that's in the chat, man. I'll get up for Sebastian that's in the chat. shout out to a couple people that tapped in for the Pace Labs on the Magical Fibonacci tool. Like I told y'all, the pre-order sales were abysmal for the Magical Fibonacci tool. It's all right. I don't blame y'all. I blame myself. I don't be promoting stuff.
Hey, I got a question about that here.
Yeah.
You I know you said at one point you wasn't gonna even open it up to like your gang, so to speak.
Mm-hmm.
But just like I say, I'm gonna support you all day, but I really need to like understand. For us, it's gonna give us more depth. I know for others who don't understand it at all, but
No.
it's okay. Because I was gonna say, I mean, you go over it quite a bit, and I'm just trying to make sure I'm not missing anything.
No. It ain't gonna give you nothing that I ain't gave you already. I could sit here and money grab and be like, oh yeah, you need to go get it. But what I be telling y'all all the time, I be like, if people in the gang, you buying it just cause you want to put some money in my pocket. Because there ain't nothing new that I could share. There's nothing new I could share under the sun. It's just all about application. Now, when you talk about like the mentoring part of it, where we sitting down and going through, okay, this how you do it, this how you do it, this how you do it, that's like a different thing. But if you already in the gang, you know what I'm saying, y'all have access to me all the time, and y'all know when you be asking questions, hey, we go through it. You see what I'm saying? That's why that like, yeah, no, it ain't gonna show you nothing that we ain't talked about already. It ain't gonna show you nothing that we ain't talked about already. Anybody in the gang that pull up and buy it, y'all just supporting Tim. Hey man, I appreciate what you're doing here. I'm supporting you. I'm getting this. You know what I'm saying? Yada yada yada. Now the only thing outside of that is what's said during the session. If it goes somewhere deeper based off an individual's personal question, I can't answer that. You see what I'm saying? Because it's based off of what happened in the interaction. But just getting the Magical Fibonacci tool, nah, it ain't. Just think about the Smart Money Manuscript. Think about the artery and price action. All of it is the same information. You see what I'm saying? Okay, all right. I don't know if Yolanda passed out or...
No, I'm sorry. My kids were asking me something. I didn't want to be screaming. No, I appreciate you. You know, I support you all day, but I don't want you to feel like, oh, we don't appreciate what you putting together, because I appreciate everything. Like I said, you poured into us. I'm just,
Yeah. That's why I told y'all in the beginning when I first was putting together, I was gonna block y'all from being able to buy, because I can go in and block people from buying it. Like I can go, like, if you yeah, you said you want to block it. Yeah, I did. Like, because if I go and WAP, if you already like a member, I can go in and say restrict these members from buying this. I can go in and say that. I can like make, but then I was like, hey, maybe some people just be like, I don't really need it, but because I've done that in the past. Like when I was a videographer and a photographer, if people who I like rock with and support, I would like, so they put out a course, you know what I'm saying? I would just go support their course. You know what I'm saying? Even though I really didn't need it, but I would support their course. And then a lot of times I would like pick up stuff out of it that I never even thought about. You know what I'm saying? But I would just do it just to support them. You know what I'm saying? But other than that, nah, you ain't gonna learn nothing new. You ain't gonna learn nothing new. Nothing that we done already talked about. It's just a straightforward, no frills. This is exactly how you do it. Right? It's straightforward. what a Fibonacci, teaching like the history on the Fibonacci tool and what it is. Not all of it, but touching on what the Fibonacci is and how it's applied in like regular retail stuff, telling what it is, telling how to configure it and get it set up for the like using it with the ICT concepts, how to clean it up and make it look good, all in using the TradingView platform, telling how to use it for trading OTE, exactly how to use it for trading OTE, what you specifically, you ain't just taking it and putting it somewhat exactly what OTE calls for when you're using it for OTE, telling how to telling the power of the midpoint. It's things talk about the power of the midpoint, talk about all the different types of midpoints, the power of the midpoint, talking about grading. What are you doing for when you grading it, how you anchoring it when you grading it, how you anchoring it when you looking for the midpoint, talk about projections, how you anchoring it, talk about projections, why are you doing it for it's going through no fluff, just telling this what a fib tool is, this how you set it up for all your ICT needs, this how you use it for this concept, this how you use for this concept, this how you use for this concept, this how you use for this concept, going through everything with this is exactly how you anchoring it and why. You know what I'm saying? And yeah, so if you ain't never had that, hey Tim, I shot you a message on Discord. When just now? Excuse me. So, anybody got anything else? Oh, let me update my ES lines real quick. ES and my YM lines. Anybody else got anything? Deborah, you still in here? Where my dog Sherwin at?
Yeah, I'm still in here.
How my dog Sherwin doing?
He's upstairs. He's doing good.
Oh, that's good. You ain't got him stuck upstairs with that grandbaby, is you?
No,
It's
no,
Sunday.
he's in the kitchen.
Okay, it's Sunday now. It's Sunday. Sunday. Granddaddies get off on Sunday. That's it. Ain't no grandbaby time on Sunday for the granddaddy. Can't be trying to tie my dog down on Sunday. That's the day where you relax. You go fishing. You go watch some. Well, it ain't football season right now. I don't watch basketball, so I don't know what's going on with basketball. I ain't no basketball person. But yeah, this granddaddy time right here. I mean, this man time here. This ain't granddaddy time. Trying to stick my dog. Trying to pretend like you got to work a 15-hour shift. No, you don't. Ain't nobody even got sick over the weekend.
No, I go in at 7.
Tonight?
7 to 7.
Oh, wait a minute. Why you went? You should have been sleeping.
Well, I couldn't really sleep, so I took a nap earlier.
Oh Lord,
I'm good.
These people they blood pressure ain't them gonna be right.
Stop.
People blood pressure ain't them gonna be right. And mixing charts up and everything.
No.
Writing the wrong shift nurse on the
No.
on the whiteboard. What they call them, the shift nurse? What they call when they come and write it on that board?
On the whiteboard.
Coming
Yeah.
at every
At
3
shift
hours
change.
and waking people up in the middle of the man. Stop coming in my room.
It ain't a
waking me up.
hotel. It ain't a hotel, baby. You there to get cared for.
No, I'm be coming here and I'm sleeping. I don't need you
No.
coming in here checking my blood
No.
pressure at 3 o'clock in the morning.
That's right, blood pressure. Yep. Gotta get it.
I remember when I went to the hospital when I was in AIT. I had dehydrated, and I ended up in the hospital for 3 days when I was at AIT. Matter of fact, that's when Michael Jordan was playing baseball. It was his first professional well, whatever league he played in, but his first baseball game. And I'm talking about this man, the first time he got to the bat, I want to say he struck out. They gave him a standing ovation. They gave him a standing ovation. He struck out. They gave him a standing ovation. And then I think he struck out twice, and I think he got like 1 base hit. But everything he did, they gave him a standing ovation. I said, boy, y'all better stop playing with me. But I was in the hospital, and they came in there, I think, every hour on the hour, checking my vitals. I said, boy, I was so tight. I was so ready to go back to the barracks. I was so tight because I couldn't get no sleep because they kept coming in there messing with me every hour on the hour. And then I'm scared of hospitals anyway because you be in there, you always see that. Why don't things be making that noise? Why be blowing that air like that?
Well, you talking about the bed?
No, it just be like them little machines. They be making noise when you be in the hospital. You just hear them. They be like, I don't know what they be. I don't know if it be like somebody breathing machine or if they just be making
probably.
They just be you just hear like air escape. You know when you open up like a little valve and air come out, they be like and you know it'd be like beep. You be hearing beeps everywhere. Doop, beep, beep, beep. Like, oh my God. Then it be cold. And don't mess around and go to no flow where you got some ghetto nurses and they got that cheap weave on. So now you can smell that cheap weave.
Oh my God. Listen.
smell like cheap weave in Bath and Body Works.
Oh my God.
All you smell is a bunch of Bath and Body Works and cheap weave. New here. Do you live trade? I love to jump in on a lot. No, I don't live trade. Lone Wolf Nomad. I do not live trade. I'm here to help people to learn how to fish, not teach them how to copy. So I do not live trade. Me and the gang, we tape breed over live price action, but I do not live trade. Some of the gang be sneaking and trading in the background while we tape breeding. Ain't that right? Ain't that right? Who be sneaking? Yolanda be sneaking. Steve be sneak. I think Steve is a sneaker too.
We're not allowed to trade?
Oh yeah, you can trade if you want to.
I confess.
Deborah, y'all can trade if y'all want to. I ain't saying you can't trade. You see what I'm saying? I'm just saying that I'm here to assist you in your tape reading. I'm not here to tell you to push a button to risk any capital. I am not a financial advisor. I'm not a fiduciary. Nothing I say should be taken as financial advice. But no, Lone Wolf, I don't live trade. I just tape read with the gang. The gang, as you hear, they be trading while we tape read. They trade. I know they trade on their own. I trade on my own. You know what I'm saying? I share my thoughts on what I'm looking for. I share my thoughts on, you know what I'm saying? Sometime it align with what the gang looking for, sometime it don't. I ain't saying I'm wrong. I ain't saying they wrong. Because there's more than one way to skin a cat, right? I may be looking to trade against the grain, right? But I let them know, hey, this is what the algorithm is showing. We're showing we're in a buy program. If we're in a buy program, we should be looking for reasons to buy at a discount. But that don't stop me from shortening the premium. You see what I'm saying? So, yeah. But yeah, you can trade if you want to. We doing this to make money. Right? We're doing this to make money. If you're doing this to make money, you want to push the button and you want to, you know what I'm saying, put on the risk to make some money, that's up to you. But I personally, I'm not going to tell anybody to risk capital, right? All I'm going to do is just tell you to take the stuff that I share with you, my understanding of it, go back study the price action, see if it's sold, and then go sim trading and see if it worked for you. If it worked for you, then you make the decision, hey, I'm ready to push the button. All right. I'm just here to help people get a better understanding of it because I know that it works for me. Right? I know that it works for me. And y'all already know how I feel. If anybody don't think that I can do this for real. I need to get Gemini to make me an animation of this right here. I need Gemini to make me an animation of this. I think I might work on that today. Hey man, I appreciate y'all for hanging out with me, man. My mom, wait a minute, no, it's not 6 o'clock yet. I was gonna say she probably at evening service. She go back to evening service at 6 o'clock. My congregation don't have an evening service. I go to church on the north side with my Caucasian brothers and sisters. I go to church on the north side. No, I don't go to church on the south side. When my mom first moved here, she started going to the congregation that I was going to, and then I moved. Me and my boys moved to another congregation on the north side of town. For those who don't know, over here in Columbus, you know what I'm saying, the north side of the town, that's it's the south side of town is predominantly black. The north side of town is predominantly white, right? And not saying it ain't no black people up there and ain't no white people down here, but it's like predominantly white on that end, and on that end it's like you can see that they put more money into that end of town. So those are the type of things that we be fighting for down here. To like, I stay out east. I stay on the east side, and you know what I'm saying, they've been working on roads over here in the east side for like 8-9 years now. And over there on the north side, right? Over there on the north side, they tore down, they totally redid an entire area off of the main highway out there. They built a new exit over here, new exit over there, made this road cross like this right here, so the northbound traffic switches over to the southbound side, the southbound traffic switches over to the northbound side, then they cross back over and go over into Green Island over there where the real rich people live, and they reconstructed all of this in less than 2 years. But over here on the east side and on the south side, they've been working on the road for over 6, 7, 8, 9 years. They, you know what I'm saying, they be showing more love to the north side, right? But she told me about this. Oh, that's what I meant to tell y'all, man. Remember the other night when my brother was asking me about the video, and he was like, you should have had it on your hard drive. I went through and I looked through some old hard drives, and guess what? I found it. Remember when I showed y'all fangs the other day? Right? Who was on? Was y'all on here when I showed y'all fangs? Who was on here when I showed y'all fangs? Was anybody on here when I showed y'all fangs?
You talking about his music video?
Yeah, my son. Yeah. Y'all was on here when I showed
the hat.
Yeah, and Where's My Hat was the little video, right? So Fangs was his latest music video. Right? Fangs was his latest music video. I don't know how to spell his name. Right? This was his latest music video right there, right?
I get hot too fast, don't make me.
That's him there. right? That's what
You better pull up, get rearranged.
right?
I was your blood, little
Now.
bitch, okay, I show my things.
Okay. That's him there. That's the grown man. That's the 19-year-old. Now, we're gonna go back, way back, to where it all started. This is the first, is it in downloads? Where did I put it? Source, new folder. No. Isn't it source? Learning Futures. Star Owl logo. When I first got him his computer, I created this logo for him right here. You see see this diamond chain right here? See like the little diamond rope chain? And then I got like this owl feet. And then I got like this owl, right? I got this white owl, and then I created this logo for him because he was like, it's like Il Jordan, the producer, because he was like going by like the name Star Owl, right? So I had created this little logo for him right there when he had first started like really producing for real. But let me find hold on, let me just do a search. Let me do a search. There you go. Right there. Where did I put it? Where is that at? It's in no. It's inside. Yeah, it's source files. So I was in the right thing. But looking at, all right, so this is Il Jordan's latest, right? This is him, that's him. Right? Grown man. Right? Now, without further ado, this is the beginning. This is the first video. This is his first music video. He wrote the song. He made the music, and then I have him shoot the video. This was it with his concept. We lit. Timmy Time Vlog All Stars.
Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit. We lit. Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit. We lit. Yeah, you know you lit. Yeah, she know she lit.
Look at Chris.
Yeah,
Look at Chris.
I know I'm lit. Now we all lit. We lit. Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit. We lit.
Timmy Time, back at it again. Subscribe to my channel. Go tell your friends. Every day in the life, yeah, it be a party. Sure, you can show up, just don't be tardy. I'm gonna hurry up, you know how fast that clock tick. Y'all know, in the Rogers house, it always be lit.
We lit.
Yup, in the Rogers house, it always be lit.
We lit.
Couple down before the clock run out of tick. Ice on my wrist, yo, not really that rich. But I got some new shoes, though, that's it. Cause you know this house, it be lit. Yeah, this place, it be lit. We just have some good fun, that's it. Cause you know how we run it. Yeah, you know how we run it. Rock, pop, 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 pop. You know it be me when you hear that sound. Turn up the beat, dance to that sound. Mama, turn it up and play it loud and proud.
Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit.
We lit.
Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit.
We lit.
Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit.
We lit.
Yeah, you know you lit. Yeah, she know she lit. Yeah, I know I'm lit. Now we all lit.
We lit. Walk in the party with fresh new shoes. With fresh new shoes. With fresh new shoes.
New shoes.
Everybody looking at me cause they know what I do. Cause they know what I do. With fresh new shoes. Walk around the block with a new watch too. With a new watch too. With fresh new shoes.
New shoes.
Looking at my watch, I'm the man of the hour. I'm the man of the hour. With fresh new shoes. 2 minus 2 equals done. But son, I ain't quite done. Watch this bass go boom. Watch this whip go through. Hail Mary, now they don't know what to do. Hail Mary, now they don't know what to do. Cool me down, I'm on fire, cause I keep on going higher. Skills will shock you like
Timothy, Chris, come on, time to get up. Let's go. Boys, come on. Time to get up. Let's go. Let's go. Gotta go. Y'all say your prayer. Let's go. Get up.
Man, last night I had the most lit dream ever.
Yeah, me too. It was a real situation.
Man. We lit.
We lit. Yeah, you know we lit. Now we all lit. Hey, my son probably have a conniption if he know I was showing y'all that. He deleted that off his YouTube channel. Cause he was like, I don't want nobody to see that. He said, I don't want nobody to see that. Man, I said, why you deleted it, son? You're like, man. Impressive. They've been doing it a long time. Oh man, I wish you know what? I don't know if I copied it. I don't know if, because we used to shoot like skits and stuff. Let me see if I let me see, sibling. I was trying to see if I had sibling rivalry on there. Cause we did one called sibling. Cause I showed y'all night stick. I think I showed y'all. Did I show y'all night stick? We used to like do like little skits and stuff that we used to record. Yeah, I don't have it on here. Yeah, I don't have sibling rivalry on there. And man, I wonder if I put it on my old, did I put it on my old Facebook page? Oh, it's trying to make me sign in. It's trying to make me sign in. I was trying to see if I put it on my old Facebook page. How do you find old stuff that you did on Facebook a long time ago? Anybody know how to find like old stuff you did on Facebook a long time ago? Like old videos? Who posts something about Run? Oh, that's D. Why you got something about Run and you talk about Jesse Jackson? Cause the dude Ron McNair, he was like related to us. I think he was like my daddy's second cousin, I think. But I'm trying to figure out why she putting something up about Ron when it says something about Jesse Jackson. Was D even old enough to remember when Ron died in the space shuttle? How old is D? I was like in like the 6th or 7th grade. I was in like the 7th grade. And D younger than, man, D probably wouldn't have been, she probably wouldn't have been able to remember that. Man, it's been a long time ago. That's when they won the city championship. We shocked the city. I ain't been on here forever. Cause look how small Ward is on there. That's the night that they won the championship. They won the city championship for middle school. They won 32-14. They played a team out of Harris County. Everybody like Harris County was going to slaughter them because Harris County was the only team that beat them that year. And then they came back and beat the brakes off of Harris County. What am I looking for? How do I find videos? How do I find videos on here? How do you search? Do anybody know? I ain't been on Facebook in forever. How do you search on Facebook? Anybody know how to search on Facebook? Like, how do I search my own stuff? I see where it say photos, but how do I find like videos, albums? Got Jared Early. Look at Chris when he was a little bitty baby. Jared Early.
Pick stitch, album release. Okay, let me try to go to the new TLR. I don't think I would have put it on here. I wouldn't put it on the new TLR. That's me when I was doing sine qua non. I shot a video for Mildred. Oh man, I can't find it, and I don't know how to search. How do you search? How do you search? Oh, right there. No, I want on my own. I want my own post. I can't just say my own post. Gotta remember, I'm on Facebook. Might see something crazy, y'all. You might see something crazy. I'm on Facebook. Sibling, CSA sibling rivalry, but this ain't the one I'm looking for. That's not the sibling rivalry I'm looking for. I'm looking for the sibling rivalry video. Georgia fan, Alabama fan. Man, look how little my TV was in the living room. Oh my God. Man, that thing looks so teeny weeny. Okay, not on there. I guess I didn't put it on Facebook. I guess I didn't put it on Facebook. I put it on YouTube. Let me look at one of my other YouTube channels. How do I switch? How do I switch over? Okay. Switch accounts. Try sine qua non. Oh. Your videos. All right, that's me and Woody. Nope, it ain't on there. Oh well. Guess I don't have it. Then I have no videos on here. Those right there was just. There it is, right there. There it is, right there. For those who stuck around. For those who stuck, this sibling rivalry. This is another one that we did. Right here. It's a short little skit.
You tripping. There's no way you can beat me in the 100.
Well, you're not that fast.
Bruh, I ran track.
But all your medals are from long jump. What? It's true. Plus, I just smoked you in the backyard the other day.
That's it. Let's do this.
What in the world?
We used to be right here shooting all kind of little skits all the time. on Sibling Rivalry. We had another one called man, what was the other one we did? We did it was the one with the what's name? The revenge. It was like something with a revenge when they had like the little darts. They we were like, why did you shoot me so much? That was on there. What was the revenge? Ah man, what was it called? Man, I can't remember. I know I ain't got it. I know I ain't got it on here. It was the one where you're like, had like the little Easter basket thing, and then they had like the little Nerf guns. Tim, is there a free trial to see if I want to join with you over live, PA? Nah, ain't no free trials. Just pull up. Well, all thing I do over live, PA, is just read the price action. Just pull up. Just pull up here. Anything you want to know, about helping you trade, just pull up here on YouTube, man. Because, you know, when you pull up in the Discord, if you're looking for like, you know what I'm saying, like how to do this, how to do that. That's why I say we like with our Discord, we like in the sprinting phase, right? So like the teach you how to do it, you know what I'm saying, looking to how to learn stuff. We way past all of that right there. You know what I'm saying? We at the sprinting phase where it's like, you know, you already got it down pat. So just pull up here. Just pull up here and ask any question you gotta ask. Like I say, on Tuesday mornings at 9, I do a pre-market analysis on Tuesday morning at 9. So like Tuesday morning at 9, that's your sneak peek of what the pre-market analysis is, right? So we do pre-market analysis on Monday, right? We do pre-market analysis on Wednesday, then we tape read, and then we do pre-market analysis on Friday. You know what I'm saying? So pull up Tuesday. That, you know what I'm saying? That's what the pre-market analysis is. And then we got monthly Q&A on the first. It's the first Sunday, right? We got monthly Q&A on the first Sunday. All right. Yeah. So monthly Q&A on the first Sunday, and then pre-market analysis 3 days a week, and tape reading every Wednesday. All right. Yeah, so I guess Tuesday would be like your sneak peek of what the pre-market analysis is. And then, but yeah, like I say, if you want to, you know what I'm saying, if you want to pick my brain, or if you want to just, you know what I'm saying, try to pick up, you know what I'm saying, more stuff about how to use the ICT concepts, just pull up here at 6 o'clock in the evening when we go live at night. That's your best bet. You know what I'm saying? That's your best bet. Save you $50 a month. Cause, you know, it ain't no signal service, ain't no live trading, ain't gonna be nothing that you can, you know what I'm saying, copy off of. Right now, if you wanna, you know, just trade while we tape reading, you know, that's on you. But I'm not calling out entries. I'm not saying get in here, right? We just reading the tape. We just reading the signatures. You know what I'm saying? The red clay strays. If you don't know, oh, that's Matt Rife. Oh, Matt Rife was in somebody's video. Hey man, that's all I got. I ain't got nothing else. Y'all, gang, I'll see y'all tomorrow at 9. Everybody else, I'll see you tomorrow night at 6 for the price action recap. And to the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. Y'all be safe out here in these trading streets, man. Gone.